Hello, everyone. I am just waiting to see if we have a few more people join us before we get going. But I hope everyone's having a good Wednesday, halfway to the weekend, which is always nice. And what also feels like the end of summer, which I'm honestly kind of excited about. I'm excited for fall, some cooler weather. Just gonna give it maybe one more minute, see if we have a couple more people join, and then we will start. Hopefully you guys can hear me okay. If you can, please send in a Q&A chat, but audio should be good. Okay, let's get going on this webinar. So good morning or good afternoon, depending on where you are, and welcome to today's webinar. My name is Camille Blomdahl, and I'm the Director of Client Services at WealthTrace. I will be taking you through the WealthTrace Planner today. And if you have any questions as we go along, please send them through the chat, and I will do my best to answer them after each section. I may hold off on answering some of them until the end of the webinar, or I may need to follow up with you via email. And to ask a question, please click on the Q&A button, which you should see at the bottom of your Zoom window. Okay, so we are going to be starting off on the home screen. On this screen, you can get a brief overview of your plan and see how your retirement plan is shaping up. This page will show you how things are how things are looking if the returns are similar to what they have historically been. So the home screen is a static look into the plan projections, and it assumes the rate of return on all investments are the same every year, unless there is a future asset reallocation. And I see a question from Brian if the recording will be available for viewing later. And yes, it will. We will send out a recording of this to all the participants when it's ready after the webinar. So you can see the projected investment values over here on the right-hand side at John's retirement and at Heather's retirement. This is not the projected value for each of them, but rather the total investment value at each of their retirement dates. These projected balances are shown in today's dollars, and what we mean by today's dollars, also known as inflation-adjusted dollars, is that we have stripped out inflation to make the numbers easier to understand. We often use today's dollars in financial planning as the projected balances can otherwise appear much larger than what they will actually be worth in, say, 20 or 30 years. You can also see the projected investment balance at the end of their plan right here and the projected net worth at the end of their plan. You can see the current asset allocation across all of their accounts here, which is a great way to quickly view how you are invested. You can see any future asset reallocation here, which we will talk more about when we head over to the plan settings and assumptions. And in these graphs over here, you can view things like how expenses are paid for in and before retirement, investment balances, how funds are spent, income versus expenses, and net worth. And if you hover over these bars, you can view the breakdown of each bar and see more data. You can also click on the legend down here below the graph, which will filter out the data, and you can pick and choose what you would like to view. Over here on the left-hand side, you can see all the investment accounts that are in this plan with the balances. The accounts that show a date below the balance are the accounts that are linked through Yodlee, and this date will indicate the last time that the account was successfully updated. We will talk more about Yodlee and linking accounts a little bit later in the webinar. A great feature that we have on this screen is that you can play with the sliders up here to see how your results change. So for example, you can change your retirement age and your living expenses, your contribution amounts, the rates of return, and you can also change the amount spent on goals and additional expenses. If you move these sliders, the results shown below will change in real time, so you'll quickly be able to view how changing those will affect your plan. So for example, we can see down here the projected investment values, and if we give John a really expensive car, you can immediately see what happens to the plan. So, and you will see these sliders on multiple of the other screens as we go along. Now let me take a peek at your questions. So I see a question from Ed asking, what should we expect in the newer version that is coming next year? So the main thing is that it will be a complete overhaul of the user interface. So the software is going to look different. The underlying mechanics will be similar. So the inputs that you have here will be available in the new version, but it's going to look different. It's going to be much, much faster. And that is one of the things that we're very excited about. So any kind of lag that you have right now won't be happening in the new software. So just much faster. It'll look smoother. We will have new features as well. And then I see David asking, what is the best way to check how one's current status compares to a plan created in the past? Do you recommend printing out a plan and then comparing into that in the future? Is there a better approach? That is actually the approach that we recommend the most. Most users will print or at least save their plan quarterly or once a year just to see how things are changing, especially if you're making large changes in the software. So if you're adding, a home sale or taking that out or changing your expenses, that is a great way just to keep track of what is changing in the plan. So I would say, David, that is definitely the best way to keep track of kind of how your plan is changing over time. Okay, so let's head over to the plan inputs and assumptions. Okay, so in the plan inputs and assumptions, this is where you will be building the foundation of your plan. On the personal information page, you can input all of the basic information about yourself and your spouse or partner if you're adding one. You can import or input your date of birth if you are already retired. If not, then your retirement date, your current salary, and how long you expect to live. In the plan settings, assumptions, and taxes, I'm not going to go through every single setting, but I will point out a few important ones. You can edit the inflation and COLA rate here, and you can either choose to use a static rate for the entirety of the plan, or you can choose to vary inflation and COLA rates by year as shown here. You can click on these numbers to edit them, and you can easily add or delete rows. This is an important feature to have in retirement planning, and it will add to the accuracy of your plan projections, especially in times of volatile inflation like we've been experiencing lately. You can input your annual living expense down here. And I want to point out that you should enter what you think your living expenses will be when you are retired. So, for example, if you have children and you are paying for their expenses currently, you will want to remove those expenses from your annual expenses if they will no longer be living with you when you are retired. These expenses will automatically be adjusted for inflation within the software, so you will not need to update these every time you log in unless you have significant changes. You will, however, want to update your annual expenses at least once a year, along with your Social Security and any pensions as well. And your annual living expenses should include the typical monthly expenses that you have, such as household bills, groceries, gas, utility bills, things like that. Larger expenses such as mortgage payments, car payments, annual vacations should be added in the goals and additional expenses section, which I will show you how to do later. And I just see a question coming through from Eric. And yes, or I should say, you should leave out any income or investment taxes because the software will deduct those for you. So you will not want to add any taxes yourself. I also want to point out that these expenses will only matter when you are marked as retired in the software. If you're still working and earning a salary, then the software will assume that you're paying for all of your expenses using your salary. And we have a great built-in budget worksheet, which can help you calculate your annual living expenses. You can add up to 3 separate budgets here, and you can easily toggle between these down here to see how this would affect your plan. You can click on any of these rows to change the expense description and the amount, and you can easily also here just add a row or delete a row. These amounts will also be automatically adjusted for inflation. Should mention that. And then let's head down to the advanced settings. So you can select to reduce living expenses by a percentage here when one partner passes away. And you can select to have the software assume that you're rebalancing your investments annually here. If this is set to yes, I'm going to explain a little bit more about what this means. So if this is set to yes, the balances of accounts in each investment section will be rebalanced back to the share that existed at the beginning of the first year. So, for example, let's say you have 2 investment accounts in the qualified tax deferred section. The first has a starting balance of $500,000 and the second has a starting balance of $400,000. The first account has a beginning percentage of 56% and the second account is 44%. Regardless of the growth of these accounts or withdrawals from them, they will be rebalanced at the end of the year such that the first account is once again 56% of the total and the second is 44% of the total. And the idea behind this is that most people will rebalance to maintain their current allocation each year. And this is a way to handle this for financial projections in every year. And down here, you can add up to 2 future asset reallocations. You can create your own model portfolio to reallocate to, or you can choose from one of ours. We have many model portfolios for you to choose from, and I will show you where these are located towards the end. A lot of people will reallocate their portfolios as they age. Most people will move towards a more conservative asset allocation as they approach retirement to minimize the amount of risk that they are exposed to. Sorry about that. I'd also like to point out that WealthTrace can calculate your Medicare premiums for you and add those into the plan. And this can be toggled on right here. This is often an expense that is overlooked in retirement planning since the premiums will change depending on your income. So it's important to include this. And then we're going to pop over to the taxes section. You can have WealthTrace estimate your federal income tax for you based on the information that you have entered, or you can manually enter your own federal income tax rate right here. You can enter your state tax rate down here, or you can choose your state of residence. Just like that to know for now. You can also indicate whether the state tax rate will change at retirement or in a future date. And this is a very helpful feature for those that may be relocating to a state with a higher or lower state tax rate at some point in the future. You can also add a capital loss carryover down here, which will be applied against any capital gains on taxable investment assets. And if you're not familiar with capital loss carryover, it means that when you've sold investments at a loss, you can use the capital loss tax deduction over multiple years to offset future capital gains. So, for example, if you have $50,000 in capital losses, you can offset $50,000 of capital gains, meaning you will not owe any capital gains taxes on those $50,000. And then let me take a peek at your questions. I see one question from Ozer asking if there are any tax implications calculated with rebalancing. And yes. I see Scott asking if the new version of the product will allow for importing from Quicken for things like budgets and existing holdings. We plan to have at least holdings being able to have imported. We've had a lot of demand for this, so it is something that we're working on. It will not be available in this user interface, but in the new one, yes, that is the plan. Dominic is asking if the software will adjust the capital loss carryover yearly or if you guys will have to do this. We will not adjust the capital loss carryover. So anytime that there is an update and you have used any of that, you should pop in and update it. Okay, let's head over to the investment assets. Okay, so this is where you will see any linked or manually added investment accounts. You can change the account names, assign an owner, see the balances right here, enter any underlying holdings, add contributions, and see the annual return. If you click on this magnifying glass right here, you can see the holdings and the balances. If you instead click on the little pencil icon, you will be able to edit all of the account information. Under the account holdings and exceptions tab, you can change the account type, add the cost basis, tell the software when the funds can be used and whether or not you want to exclude the account from a future asset reallocation. And if we go ahead and click on one of the accounts that is not linked through Yodlee, you will also have the option to either assign the entire account an asset class, which you can do right here, or if you click on yes for entering underlying holdings, you will have the option to input the tickers for any holdings that you have, which will give much more accurate projections, and the balances will update daily. Oops, we will do no, there we go. And any accounts that are linked through Yodlee will show up here with a green check mark, which indicates that they have been updated upon logging in. I want to give you guys a little bit of additional information on why linking accounts through Yodlee is extremely valuable when creating your financial plan. So when investment accounts are linked through Yodlee, the investment assets are updated daily, and we are able to retrieve every underlying holding, such as stocks, bonds, mutual funds, ETFs, and more. We also retrieve the asset class that the holding is assigned to. This allows us to map the holding to the correct asset class within WealthTrace, and it also allows us to pull in the historical information for that holding, which is extremely valuable and adds to the accuracy of the projections. And we have 3 sections that accounts will be placed into. In the taxable and tax advantage section, you can add brokerage accounts, Roth IRAs, HSAs, 529 plans. And in the qualified tax deferred section, you can add regular IRAs, 401ks, inherited IRAs, SEP IRAs, and more. And finally, in the non-qualified tax deferred section, you can add deferred compensation accounts and annuities. You can also drag and drop your accounts within these sections, which will change the order in which they are used in the software. By moving these around, you can see how this will affect your overall plan projections and the tax calculations, which is important if you have an account with high capital gains. So any accounts that you have with high capital gains, you'll want to drag those to the bottom so that they can be used as late as possible in the plan. And to drag and drop, you simply just drag and drop. You can add your Social Security payments in here, or you can have the software estimate it for you. You can also input if the payments are going to change at some point in the future, which is applicable to those who may be taking their own Social Security payment to start, but will later be taking half of their spouse's Social Security payment when they start taking theirs. You can also add one or more pensions down here, along with the age of the first payment and whether or not the pension has a survivor benefit. Moving on to additional cash inflows. So, in this section, you can enter any type of additional income or additional cash inflow that you may have outside of your normal salary, or any type of income that you will have in retirement. So, you can enter things such as a future inheritance, annuity income payments, and proceeds from a home sale or a business sale. You can add when or how often how often the cash inflow will occur, and you can assign the income its own tax rate by either choosing one of our tax rates or entering your own. Just like your annual expenses, you should make any necessary updates here at least once per year. And in the goals and additional expenses section, you can add any type of expense that you wouldn't want included in your normal annual expenses. You can enter things such as purchasing a new car every 10 years, an annual vacation, your mortgage, additional healthcare costs, and more. You can easily make changes to these expenses without having to edit your annual living expenses. And you can add when and how often the expense will occur. You can also tie an expense to a specific account. So, for example, this expense for Allie's college tuition, you can tie to Allie's 529 plan. In here, you can add any assets that you own that you'd like to be included in your net worth. These will not automatically be used to fund any goals unless also added in the additional cash inflow section. Their value will just be added to your net worth. And as shown here, you can add things such as items like expensive equipment, collectibles, property. And then if we head over to liabilities, you can add a mortgage or other loans in this section. If you add a mortgage, the software can also calculate your annual mortgage payment for you and add it to your goals or add it to the goals and additional expenses section. So for example, if you input the information in the loan information section, it will calculate it for you and add it just like it has for me right here. So now that we have reviewed all the plan inputs and assumptions, let's pop back over to some of our headers and look at our plan results and breakdowns. We're going to start with the Monte Carlo section. And while this is generating, let me take a look at some of your questions. So I see Eric asking if the annual return is a computed value. So the annual return is going to be based on the underlying holdings and which asset class they are assigned to. So if you have multiple asset classes, multiple holdings, it's going to give you the computed value of that. I'm assuming that's what you mean. You can also change that if you wanted to override whatever the asset class generates for a return. You can override it by just inputting whatever return you want as well. I see Carl asking about Yodlee pulling in duplicates of accounts. This can happen. It should be pretty easy just to delete them. If you can't delete them, just shoot us a message either through the chat or through support, and we can help you with that. But usually you should be able to just remove any Yodlee duplicates pretty easily. Okay, some of these are the questions I'm going to hold off on for now. So I see Bob asking, when adjusting projected rates of return, I can only move the bar which changes in 0.5% increments. Do we have the ability to input specific numbers, say 4.8%? Yes, if you did it in the scenario section instead, you can run a user-defined what if scenario, and in there you can input whatever percentage you'd like. So you can reduce or have them go up or down and run that scenario. I can show you that a little bit later, but yes, you can do that. You can also override what, like I mentioned before, the return that we have, and you can override it for each account if you wanted to see what happens to the plan. I would just jot down whatever numbers were there from the beginning if you want to go back. Tom's asking if we have any changes to the Roth conversion tool coming in the new version. No specific changes that I know of at the moment, but I know we're always adding things. So I cannot answer to that right now, but my guess would be yes. At some point, yes. Bob's asking if we can adjust living expenses to a different number in projections versus leaving a starting amount and just having that number grow forever. So what you could do is use the varying expenses like I showed you. If you input a different amount in the future, you can have that go down if you don't want them to keep climbing with inflation. So if you can input as many rows as you'd like to. So if you want those numbers to go down versus go up, you can just do varying expenses instead. Okay, back to Monte Carlo. So Monte Carlo in WealthTrace tells you the probability that you will never run out of money in retirement. We run 1,000 scenarios where the rates of return on all of your investments change in every year. We drill down into every holding that you own and look at the history of the asset class to see what its average rate of return, volatility, and correlation with your other assets has been. We offer the most accurate Monte Carlo result that you can get because we're actually looking at every single holding that you own. WealthTrace is then able to generate a distribution of investment returns, which allows the program to generate a series of varying investment returns every year. When the Monte Carlo simulations are run, the program counts how many times in these simulations that you run out of money. What is shown here is the percent of the time that you never run out of money. So the best you can get is 100%. We're not doing so hot right now because I've entered a lot of expenses for them, but ideally this is, well, I shouldn't comment, but you may want a higher number than that. So down here to the right, you can view the worst quartile, the median, and the best quartile. The number shown here is the average of the simulation shown in that quartile. In this graph here, you can see the 1,000 trials that were run, and this blue line here is the median ending investment value in each year. And the sliders that we looked at in the beginning are also on this screen. So if you move these, you can immediately see how your Monte Carlo result changes as well. And we're going to pop over to the cash flow projections. Ozer is asking about Monte Carlo results, and he's saying a higher Monte Carlo result is obviously better. Is there a rule of thumb number that one could take comfort with? A wealth advisor had once mentioned him that above 80 is the best. So we try to stay away from recommending a specific number because it is so individual. Some people might be completely content with a lower number because the way that their plan is structured, and some might want to see that 100% because they have a lot of high expenses in the future. So it's so individual that it's hard to recommend. If you were to book an expert support session, for example, we probably could recommend something based on your plan, but just an overall number is just too hard to come up with because it varies so much. David's asking what kind of information is typically covered in a planning session. So it depends on how long of a planning session you book, but typically they're done with Doug, and typically he will review your entire plan, with you and go through every single setting, and then he can make recommendations based on the information that you have in there. So he can review, tax strategies, Roth conversions, withdrawal strategies, your cash flow, all of those things. So it just depends on how detailed you want it to get and whether or not you need help with the input or just more data manipulation. Okay, so in this section, you can review your cash flow year by year. You can see all of your income broken down in sections. So we can see their pension income here, Social Security. Down here, we have any cash inflows that are coming in, and then the total income is shown here. You can see all of your expenses in retirement and any additional expenses that you have added here, and along with whether or not you are going to have a surplus or a deficit year by year. You can see your estimated federal income tax right here and the state income tax. You can also see your estimated required minimum distributions. And I want to point out when it comes to the RMDs that we will show your total RMD amount. So if you have multiple IRAs, you will see the combined required minimum distribution here. So it's not divided by account, it's the total for all of your IRAs. And you can click on these headers up here to dig into the data in more detail. You can view each account by year, for example, to see the balances, projected growth, average rates of return, expenses paid by account, and more. You can also export all of this data to Excel, PDF, or CSV by clicking on one of these options, and then you just click on the little cloud to download the data. The sliders that I mentioned and showed before are also on this screen, so any changes that you make here will also change the data in real time below. Carlos asking, what are the benefits of placing car vacation expenses in the future goals section rather than adding it in the yearly expenses section? So the main thing for that is you can obviously control the amount a lot easier. So if you are spending different amounts on your vacation expenses every year, you can control that. And odds are you're not buying a car every year. So it makes more sense to add it there. So that way you can tell the software that you're buying a car every 5, 10, whatever it is, years. You can also assign them their own tax or growth rate and all of that. So it just gives you more customizable rather than just kind of lumping it all together. So in the investment history breakdown section, you can view the historical data on all of your investment accounts and also look at all the holdings that are in each account. You can see the allocation by individual account, or you can group any combination of accounts together to view the asset allocation for that combination. You can also choose to group the account by type. So if you, for example, select retirement accounts, you will see the asset allocation of those accounts grouped together here. You can also scroll down to see the current balances and the year-to-date return. You can see the historical performance for the investments that you owned here, and you can even compare funds that you own to other funds to see if there are other options out there that are performing better than yours. So, for example, if we do this, it'll compare and show you whether or not this could be a better option for you. You can also look at the fund fees and turnover, which shows you how much you are paying for your funds. You can select which account you'd like to view here. You can also look at transactions for accounts that have been linked through Yodlee. So if we do a longer amount of time here, you can see all of your previous transactions. Let's head over to the scenario section. These are all of our preset what if scenarios. You can explore things like how retiring earlier or later affects your plan, changes in your living expenses, inflation, delaying or reducing your Social Security payments. And like I mentioned before, you can also create your own user-defined what-if scenarios. So this is where you can control that rate if you wanted to put in a different rate than the 0.5% increments. And you can also combine multiple changes at the same time. So for example, if you can run a scenario where you have increased investment returns or reduced and inflation at the same time to see how both of those combined would affect your plan. You can also run a bear market scenario and choose a recession to see how that would impact your retirement plan, or you can create your own hypothetical recession. And we also have, as you may have gathered, a Roth IRA conversion scenario, which is very popular. You can select which IRA you want to convert from, when to start the conversion, for how long you would like to do the conversion, and then you can select which tax bracket you would like to stay under. The software will then tell you when and how much to convert in each year to maximize your savings and reduce your taxes. I also want to mention that we will be hosting a webinar on Roth IRA conversion soon, so make sure to register for that if you want more guidance on how to use the Roth conversion scenario and how to implement the conversion into your plan. We will be sending out an email with more details on that in the next coming weeks, but we hope to have that finalized and a date in place probably end of next week, maybe the following, but we are actively working on it and we are very excited to be able to run through that with everyone. You can also run reports in the software on your plan. Like I mentioned before, a lot of people like running their plan report monthly or quarterly to have a record of any changes that they have made. You can add notes to your reports, which I've shown right here, and you can export it in multiple formats such as PDF and Excel. Before we head out of this section, I want to show you guys a sample report that we have so you can see what it looks like if you haven't run it before. So this is what the plan report will look like. If we head down, you can see the current investment assets. We keep going to the more interesting data. So down here, this is a great way to look at your cash flow distributions. I find it a little bit easier because you're not scrolling left and right as much, and it's just a lot more data on a bigger window. And we also have really great additional time series data. So here you can see the investments every single year. You can also look at, scroll down a little bit more. You can look at how the expenses are funded, which is a great way to see what assumptions are being made in the software. And you can even see, cash inflow. So there's a ton of data in here. You can see the taxes every single year. So I would definitely recommend running this report every now and then and just keeping that information for yourself. And that way you can see any changes that are made. And it's just, in my opinion, a little bit easier to view. So let's go back to the software. So before we wrap up the webinar, we're going to head over to some of the account level settings. If you have the multiple plans feature, you will see the screen that I'm looking at right now. I have the ability to add multiple plans, as the name indicates. If you don't, you won't see this. That's fine. That's normal. So let's head over to the model portfolios. So over here, you can create your own model portfolios, or you can make changes to the ones that we have created. You can click on the names and the percentages over here to make any changes, and you can easily add a model portfolio by clicking on the Add Strategy button. And you can also delete any of ours if you don't want to use these by just clicking on the little trash can. You can also make changes to the existing asset classes in here, and you can add your own asset class for things like valuable art, gold, real estate, collectibles. And these are the default rates of return that you can change, and we do update these periodically. And we are also really excited about our user interface, which we'll be releasing hopefully beginning of next year, maybe even the end of this year, who knows. And like I mentioned before, it just means that the software will be much faster and even easier to use. So let me take a look at some of these questions. Sid is asking if the user is starting a business, could that be a what if scenario? Potentially, it would probably get a little bit complicated. It depends what you're trying to change. If you want to just have more income coming in, it might be easier to just get the multiple plans option, for example, and run another plan with the income as if you have business income coming in. But I would need to know more. Eric is asking if the Roth conversion also considers increase to IRMA, and yes, it does. The Roth conversion will look at the IRMA. It will look at taxes on Social Security, taxes on your taxes in general, obviously. So if you run that, you will see all those different headers. Carl is asking, where is the best place to enter an expense for charitable giving? So we plan to add in the future an option to input charitable contributions. We don't have that right now. I would just add it as an additional expense if you want to have it come out. But we do plan on adding that at some point in the future. Daryl is asking if there's a way to see the same investment in different accounts as a cumulative sum. If you can explain a little bit more about what you mean, I might be able to answer that. I mean, you can change your accounts if you want, and you can zero one out and add it all to a different account manually if you wanted to, if that's what you're looking to do, but um, unsure. Bob is asking or saying that they live in a state that exempts the first $25 million of retirement income, whether from pension, retirement accounts, or Social Security. Is there a way to get more specific in WealthTrace versus indicating yes, no, whether state taxes apply to Social Security or pension individually? So we are working on this since we just added the option to input your state instead of your state rate for the income tax. So I believe it's in the works. I don't have a definite answer for whether or not we will be getting that nitty-gritty with it, but we are working on adding more detail. Dominique is asking, where can we see projected taxable income by year? Is projected adjusted gross income presented? You should be able to see all the projected taxable income in the cash flow projections. If you head over to that section, you should be able to see all of that information in there. Bob is asking, or he's saying he has a small portion of his 401k in a Roth. So we have the ability to indicate whether or not you have a portion of your 401k in a Roth. Let me just pop over to that right now. If anyone else has anything that they would like me to show them how to do, let me know. I'm happy to do so. So if we're in here, is a portion of this account in a Roth. So if you click yes here, you should be able to indicate how much of that account is currently in a Roth account. Joe, I have seen your question. Is there a way to fill up a tax bracket with taxable sources and then cover the remaining expenses / taxes with tax advantage sources? I am unsure. I may need to follow up with you on that one. And I can check with Doug to see how to do so. I will note down to follow up with you. Peggy's asking, how is the annual return for each account determined under planned inputs and assumptions? So all of the returns are based on the asset classes assigned. So if we go and look at, well, we can look here too, but so it's going to depend on these underlying asset classes. So it depends whether or not you have, let's look at an easy one. So for example, there's only one asset class here, cash. So therefore it's 4%. That is the input that you can view. Back here, you can see that the current annual return that we have input for cash is 4%. So if you have multiple asset classes, it's going to give you the average of the multiple asset classes. And in here, you can edit all of those assumptions if you wanted to as well. Peggy's asking, is it actual for the accounts that are linked? So even the accounts that are linked will still map to these asset classes. So if you take a look at one of your linked accounts back in the investment assets, it will still be based on the asset classes. So every single holding that comes in through a linked account gets assigned an asset class, and that is what determines the rate of return. So I can show you one of my linked accounts. So it will pull in, for example, for NVIDIA, it is mapping that to growth stocks based on the information that Yodlee is pulling in. And then we grab the return for the growth stocks that we have in the settings, which is what's determining that investment return or annual return. And thank you very much, Eric. I'm glad you find the webinars helpful. We plan to do this basic one once a month and then adding on the other ones as well. So we plan to do the Roth maybe once a month too, but we hope to keep them coming for sure. Marianne is asking if she needs to up the actual Social Security payments each year. Yes, we recommend at least updating it once a year so that the future projections can be as accurate as possible. Obviously, right now, if you input a certain amount, we will project that forward based on inflation. But if you then a year later have that amount lower than what it actually is, we will be under projecting, if that makes sense. So once a year, you'll want to update that. Okay, if there aren't any more questions, I think that's it for the webinar. Oh, one thing I do want to mention is in case anyone hasn't visited our knowledge base, you definitely want to do so. We have a lot of really, really good information in here. If you have any questions or there's anything that you can't find information for, type it in here and any related articles will pop up. We also plan to be putting together financial planning courses for active subscribers soon. So for example, we will discuss things like how to determine the best order of withdrawals, Roth conversions, which I mentioned before, how to interpret your Monte Carlo results, and more. We also offer expert support session, like I mentioned before as well, with Doug Carey. He is the founder of WealthTrace and a chartered financial analyst. He can audit your plan for you and review all of your plan inputs with you. And if you have any questions, you are more than welcome to send them through the live chat, which you can see down here. Or you can email us at support@mywealthtrace.com and we will be happy to answer any of your questions. So I want to say thank you very much to everyone that joined the webinar. I will see you guys in a month or so if you're coming back. We also hope to see all of you at the Roth IRA conversion webinar, which we will announce as soon as we are ready, hopefully next week. So I hope everyone has a great rest of your week. And yeah, that's it. Bye.